I'm also here with, who am I here
John Madrid, and then
with?
in the background we have who?
We have Bella. I'm here, guys.
Hey.
Doing the back
What's
end
up,
stuff.
Bella? And what's up, guys? Again, it is Tuesday. También me gusta empezar con diciéndole que hablamos español aquí. Y ahora es el martes y vamos a hablar de un diferente tópico. Again, guys, we are bilingual here. It is Topic Tuesday. So we're going to go over, a couple different things today. But again, we apologize that we weren't live last week, but we've been working on a lot of stuff. We've been moving into our new offices, which is a great thing for, to be better serve you guys and all that good stuff. But let's talk a little bit before we even switch to the screen. What is Topic Tuesday, Bella?
Ooh, big
So,
attention.
Topic Tuesday is just an opportunity for us to bring a certain topic around, just home ownership and the ins and outs and everything that goes in between of trying to find a home, or also just doing upkeep and little tips to upkeep your house and additives to do. But really just like educate, everybody and spread the knowledge.
There you go. How about you,
Awesome.
Joe? What do you like about Topic Tuesday?
Honestly, I like the questions that come into Topic Tuesday, the questions that people have for us, because I mean, we kind of answer some of them on. I say answer some of them. We try to answer majority of them on Topic Tuesday. So, like any of the questions that people have, whether it's credit, going down the list,
Right?
anything. I mean, whatever question you
Kind of
have
give a
for
little
us.
preview
Yeah.
of what we're going to talk in today. So let's go ahead and switch into the next screen. Okay. So we're going to go kind of slowly through here. So today's Topic Tuesday, we're talking about credit lines, credit scores. And, again, just like Bella mentioned, whichever future homeowner needs to know so that you can best prepare yourself to have the least, path of resistance when it comes to credit, right? So before we switch screens, Joe, how important is credit, do you think? Besides the obvious, besides the credit.
I mean, besides the obvious, I want to say it is important. It is very important. It's not something you can just kind of be like, kind of put it to the side and be like, you know what, I'm gonna try to buy a car. I mean, unless you're loaded. I mean, besides that,
Unless you want to pay cash, right?
yeah, unless you want to pay cash. I mean, but besides that, you kind of need credit. Buy a house, buy a car. I mean,
Anything in
yeah, a little bit
general.
of everything.
You want to keep your credit score healthy, of course.
Of
And
course.
I mean, again, nobody wants to. Well, I mean, at least I don't know anybody that wants to. You know what? I'm going to go to apply for blank, and I hope I get denied.
Yeah, yeah, no, I don't see that happening.
Ah, how about you, How about you, Bella? Do you think that anybody wants to go anywhere and apply for anything and get denied?
No. It's kind of like a demoralizing feeling. It kind of shuts you down a little bit, so it's better to be prepared beforehand than get told no.
Of
Nobody likes
course.
the word no. Nobody likes the word no.
That's right. Nobody wants to hear no, especially when you can prevent it,
Hmm.
with us here at Manu, us at Move In Next. Because, of course, yes, we sell houses and we do all that good stuff. But, on Topic Tuesdays, we're talking about different topics that homeowners and just people in general are curious about and how to go about it. So let's go ahead and go on to the next slide or move on to slide 2. All right. So, right here, and it talks about, Joe, what does it say?
It says credit lines and why they matter in home buying.
All right. So right there. So credit lines and why they matter in home buying, right? So they
Right.
matter really anywhere. So we're going to
Hmm.
kind of, touch base a little bit on them. What a credit line could be is it could be anything. It could be a credit card. It could be a car loan. It could be student loans. It could be personal loans. At the end
Hmm.
of the day, credit lines are important because they show what you're able to do and what you've done in the past, right?
Right.
Because credit scores, for example, I mean, I've seen it before. Somebody can have like an 800 credit, but only have one credit card for $300. It doesn't really show a ton of history, does it?
Yeah, like the utilization of it.
Right. So, we want to make sure that you guys are educated in the sense of saying, what are they? What should I be looking for? And what should I do? Right.
Right.
Okay. So on the right hand side, it says, right, that it can impact what?
It can impact your interest rates, your loan amounts, and your approval chances. I mean, and it is true. So like depending like on, let's say your credit history, say like you have like a 800, somebody that has like a 650 tries to go buy like $100,000 car, they could be possibly told no. I mean, besides if they make the down payment,
Right.
compared to somebody who has like an 800 credit score and they don't have to put nothing down, they can walk out the lot with it.
Yeah. And I'm glad you brought that up, which we're going to go into in a slide here in a little bit.
Oh,
But
sorry.
no,
Let's
you don't have
get
to be sorry at all. The point is it's just, the better the score and the stronger the history is. Again, I gave you one example. There's nothing wrong with having an 800 with only one credit line, but somebody who has an 800 with 7 credit lines with, a decade worth of history is going to have a better chance, a better rate, a better term than somebody who has an 800 score with one card for 3 months, with only $300 limit or something like that.
right.
Make sense?
Makes sense.
Okay. And did you know all this stuff already, Bella, as well?
Yes, fortunately, I learned at a young age on
Okay.
the best practices for credit and just overall being responsible financially. So yeah, this one was really fun to make and it was also very informational, but yeah.
Well, that's good. Well, one of the things that I want to point out as well, let's go ahead and move on to the next slide. But I want to talk about right here, it talks about credit score breakdown. But one of the things that I want to mention is what you're able to do, a little credit hack. This is a little free tip. Is that let's say that you have a parent, right? Let's just talk about a parent in general. I'm just talking about like the younger, home buyers, or in general. If you have a parent who's got really good credit, they're really responsible, they can add you onto their card without giving you a card as an authorized user, and you inherit their credit history, so you become a stronger buyer. Did you guys both know that?
Mm.
Yes.
Yeah, I mean, I had it. Yeah, I seen it. I've
Well,
heard it.
that's good. That's
Yeah,
good. But a lot of people are like, damn, I didn't know that. So there's little tricks and things like that we're going to do, of course, to help that home buyer, right?
right,
So right there, when it says credit score breakdown, and she did a good job of breaking down the percentage. We talked about payment history. Of course, that's going to affect 35% of your score is payment history. So
right.
what does payment history mean? Does that mean what? Tell me what you think it means, Joe, or what it does mean.
I want to say like making payments on time, not being late, paying early even.
Yeah. And let
Uh,
me actually let me jump in there. So payment history, right? So a lot of times, and I'm going to just use like a credit card as an example.
okay,
A lot of times, let's say that your credit card is due this month on the 15th. Okay.
right.
I'm just using that as an example. So if you pay on the 16th, you're technically late. You'll pay
Mm.
that late fee, but it's not going to show up late on your credit history. Did you know that?
Mm. Is it because you pay the late fee?
Nope. But that's a
Oh,
good guess. Do you know why, Bella?
Because it if you pay on your payment date, your statement doesn't actually come out until 3 to 5 days after. So on your statement, it'll still say that you made a current payment.
That's a good guess, but
mhm.
that's still incorrect, which is okay. It took me a while to figure it out too, believe it or not, because you are late. That's why you're getting a late payment. And you brought up a good point about the statement date, because that'll take effect into like some of the other factors of credit utilization, when the different bureaus like take a screenshot of your score. But late payments, the way that they show up on credit reports is 30 days late, 60 days late, 90
Mm.
days late. So if you're one day late, it'll show up as a late fee, will show up on your bill, but it won't show up on your credit report because you're not 30 days late, you're one
Mm.
day late. So
Mm.
kind of interesting there, right?
Gotcha.
No.
Now what
So you,
Bella brought up, huh?
okay.
Go ahead.
I was gonna say, sorry, you're saying people have up to 30 days to make up to a late payment?
I mean, you don't want to be late in general,
No,
but
I know. I'm
theory,
saying,
in theory, yes.
okay.
Yes, sir. Okay, but she did. Bella brought up a really good point. She was talking about statement dates. So the next one, when it talks about credit utilization, you want to keep your score, or you want to keep your credit, like and she puts that, and we look at that in a second. Under 25 to 30%. So like
Right.
if for every 1,000, you want to keep it 250 to $300 or less. And that's where like the statement dates being captured and stuff, because they're done at different times and different dates. So if you have your card maxed out and it does a screenshot of it at that time, then it's going to negatively impact your credit score, because it's going to show that you're utilizing your credit, too much. And that's why, like, you never want to, like, let some people say, well, I'll max my card out and then I pay it off. Well, that doesn't help because of the statement, or the statement that Bella made about how it can affect you by depending on when they take the screenshot. You know what I'm
Mm-hmm.
saying? So
Yeah.
healthy wise, you want to try to keep it again below 25 to 30%, because it is 30% of your credit score. So
Right.
at the same time, right? And then we discussed the next one. What does it say, Joe, there?
It says credit utilization
And then
or
below that,
the length of credit history.
yeah. So the longer you have an account,
Yeah.
the stronger it's going to look on you,
Yeah.
right?
Mm-hmm.
And then credit mix, which it says 10% there, is not just have all credit cards,
Yeah.
or not just have 10 car payments, because you definitely
Yeah.
want to do that, right?
Yeah. Yeah. Right. Right. Right.
And you definitely don't want to go and have a ton of new credit inquiries, do you?
No.
And then do you Bella?
No.
Nobody wants to have that, right? The least, the better. Okay, let's move on to the next one. All right. So what does it say there, Joe?
It says positive impacts of multiple credit lines.
Okay.
And are you? I'll read the next one too. Risk of multiple credit lines. Let me go ahead and break them down. I'll read the left side, and you can read the right one, pops.
Okay.
All right. So the left side, it says shows responsible money management. Positive
Yeah.
impacts of multiple credit lines. So I'm going to take my take on this.
Okay.
So what I think, like I said, I mean, it's there. The positive impacts of multiple credit lines. It is being responsible, with your money, and it's showing you have a healthy credit mix as well. And it
Okay.
can lower your credit utilization if managed well, and also adds to linked history over time. So over time, if you're making payments on time or making them even early, it shows to banks, car dealerships, people who sell houses as well, that you make your payments on time or early, and you're good with your credit. In other words,
Of course. And then on the right hand side, Bella, what does it say?
Says the risk of multiple credit lines.
Okay. Go ahead and break it down for me like Joe did.
All right. So basically, we're going through the risk of having like multiple credit lines open and what they can do for you. So the first one's like hard inquiries lower scores temporarily, but they do take a couple points off of your credit score. And when we talk about like hard inquiries, it's really talking about when you go and buy a car, right? They usually do hard inquiries for if you finance through them or if they use outside financiers. Luckily with us, or home buying in general, it does not take a hit on your credit like that. Too much available credit leads to the temptation to overspend. So, in intuitively, if we think that we have this free money, quotations free money, if we think we have a lot of this credit to spend, we're more tempted to try to spend it.
mm-hmm.
Also, missed or late payments multiply the risk. So, if you have multiple credit lines with multiple deadlines to meet, you're more at risk to miss payments.
Mm-hmm.
Also, with a shorter average account age can hurt scores. So, if you're constantly opening up credit card after credit card and they're each averaging between 3 to 6 month length, that lowers your credit history, which overall lowers your score.
Mm-hmm.
Well, there you go. I like that. So before we move on, I'm going to kind of give my y'all's combined overtake, which is perfect perspectives there, right? So when I kind of talked about it a little bit earlier, and then we kind of recapped it here. So the positive impacts of multiple credit lines. So of course, if you have multiple credit lines, that does show that you're responsible enough to be even have them,
Yeah.
right? Like if you don't have enough of them, and I don't mean enough of them, I'm not saying encouraging you guys to go and get out too many, but the more accounts you have, again, without being exaggeratory, that obviously if you were able to accumulate those credit lines, that means that your credit history is good, it's healthy, you're not having that temptation to overspend because you're managing them well, which again, that is a risk for the irresponsible buyer and even responsible buyers from time to time, right?
Yeah.
And of course, by having multiple different credit lines, you are having a healthy mix of them, because it's okay to have a car payment. It's
Mm-hmm.
okay to have a house payment. It's okay to have a few credit cards. And again, to utilize those, because when you have good credit history and things like that, one of your credit companies may say, "Hey, we'll give you a balance transfer 0% interest for a year for 3%. Well, okay, if you're responsible enough to utilize that, pay it off, then it's all about how you utilize the credit offers that you have available. Not like Bella pointed out, or how you pointed out, son, that you don't want to just be like, what, I got these 30 offers, I'm going to go ahead and take them all, and then you're over your head and you don't know what to do, right?
Right.
Okay. And then, of course, like she had mentioned, hard inquiries. Like whenever it comes to car loans, and I'm pretty sure we have a slide coming up in a second that will show, you want to get approved with your own credit bank, your own lender, whenever
Right.
you get a car, because if not, they'll run your score 25 times, and you're going to get 25 hard inquiries, and it'll crash your score, right? And then again, like she had mentioned there, having too many credit, available, it's a bad thing if you're irresponsible. It's a good thing if you have it and you're not utilizing it. Because then
Mm,
the bank will look, because of course, credit utilization, what was it? 30% of the score is credit utilization.
Yes.
mhm,
So, if you have and I'm just making a number up, $100,000 worth of credit cards available to you, and you're using 5,000, well, they're going to be like, dang, this guy or this lady or whatever the case may be is a responsible buyer, because they're only utilizing 5% of their total credit. Okay. All right. So let's move on to the next slide. All right. Smart credit strategies for future home buyers, right? So one of
right.
the things I kind of went over there, it says keeping your revolving credit card limit at 25 to 30%. I think we both have allergies. I'm like,
Yeah.
but either way, pay on time every time, right? So we want to make sure that we're paying on time every time. Like we said, it's not
Right.
that it's okay to pay late, but if you're late one day, don't make yourself late one month. I mean,
Yeah,
go ahead
yeah.
and pay the $10 late fee. It'll be okay, because every now and then everybody misses a payment. But at the same time, it's knowing what you're able to miss, God forbid if you have to or not, and what you can't miss. Okay.
Right.
And then I really, that one right there is pinpointed. It says never close a credit line. So if you have a credit card or something that's open and revolving, just because you pay it off, don't close it, because then you have less credit available, which lowers your credit score, lowers your credit, available to you, which you don't want to do that either. Okay. And then what does the next one talk about? Can you see it there? We're going like this.
Yeah, I can see it. It says apply for auto loans to your personal bank to avoid hard credit inquiries.
There you go, right? And then
Yeah.
what's the next one say, Bella?
It says avoid opening too many accounts before applying.
Correct. Especially when it comes to home buying. If you even think you need a car or something, buy your house first, because
Mm,
you want to be able to, you don't want to have to settle on a home because you went and bought the vehicle first, because you had to have it before you had the house, because we can move you in pretty quickly, faster than anybody else, right?
mhm,
And then it talks about there, only your minimum payments count towards your debt to income ratio. So again, if you have a card and let's say you owe 3,000 on it, but
mhm,
your minimum payment's only $50, that's really the only part that's going to be affecting you. Okay.
mhm.
And then I like there at the bottom where it says quality over quantity of accounts. And that's a really, really pivot point. What did you mean by that, Bella? And I say that because it's an awesome point that I'm glad that you brought up.
Really, it's when we say it's basically what it is, quality over quantity, right? We want to see quality and responsible credit usage. That's what lenders want to see. That's what we want to see instead of the quantity. We don't want to see, you know, somebody have 15, 20, 30 credit cards or credit lines open. But the quality of them may not be as good. You know, if you have a select 3, 5, 6 credit lines open and they look really well and they look really strong, that just looks really good overall to lenders and to sellers as well.
Good. I'll give an example, kind of piggybacking off what you said. So let's say that somebody, I'm just going to make up a hypothetical. Somebody has a secured card. Because sometimes people will give them people bad advice, and I say bad advice, not what you said. I'm saying like somebody will say, "Hey, you don't have much credit. Go take out a secured credit card for $300." That is going to be a quantity over quality. Now, on the flip side, if you're going to do a secured credit card and you have $5,000 available, then put 5,000 on the secured credit card versus 5 cards or 10 cards of 500. Does that make sense?
Makes
It's going to look
sense.
better to have that $5,000 secured card
Yeah.
than 10 $500 credit cards, even though it's the
It's
same
the same.
amount.
Mhm.
But that would be a good example of quality over quantity.
Hmm.
All right, so let's move on to the next one, which is really just closing up. Go ahead and tell them how they can get a hold of us, Joe Angel.
They can get a hold of us by calling us at 432-201-1105. You can call or text us, or you can email us. You can email me at joinjo@moveinnext.com, or you can email, go ahead and tell them your email.
John@moveinnext.com. Either way, it's our first names at moveinnext.com.
Next.com. And
You
the
can
website,
visit us.
yeah, the website that we got is it's www.moveinnext.com or just moveinnext.com.
Yeah.
Moveinnext.com. Move in next. Okay, guys.
Moveinnext.com.
That's,
We have it right here.
yeah.
Either way,
I don't
uh,
know. The old one. I got the old one.
yeah, you got the factory direct ones,
I
which
got
we're
the back.
still factory direct.
Yeah.
But they can see us all over all the different socials that you're seeing us now. Again, Facebook, Instagram, YouTube, Twitch, and LinkedIn, everything and anything under the sun. Let's go ahead and move on to closing remarks. That way we can look bigger. But no, either way, guys. There you go, like this. Whoop.
Yeah, let me get all close.
But Topic Tuesday. So again, today, just to kind of recap, if you're jumping in late or you watch it later on as a replay, that's fine, not a big deal. We educated you guys on credit, how it can affect your score, the do's and don'ts, and of course, it's an overview. By no means is it a thorough. And that's why we have Manu. That's why we have the QR codes. We have the 3 different links at the top. The first one being the link for the application, the
Right.
second one for the different courses that are available for Manu, and then the third one for our YouTube channel. But we appreciate you guys watching. Make sure you like, share, comment. Go
And
ahead.
subscribe. And subscribe, guys.
All right, Bella, go ahead and say goodbye as well so we can sign off.
Perfect. Thank you, everybody, for joining in, and we will see you Thursday for Move